If you receive Social Security in 2026 and your monthly deposit is smaller than you expected, you are already losing money, even though your benefits were officially increased. This is happening this year. It affects retirees right now, and for many people it starts without any warning before the next payment cycle. If you are retired, enrolled in Medicare, and rely on Social Security as a core source of income, your net check is being reduced automatically by rules you likely did not plan for. The loss does not come from Congress voting to cut benefits. It does not come from Social Security miscalculating your payment. It comes from Medicare taking priority over your benefit before the money ever reaches your bank account. Most retirees believe that once Social Security starts, the number is stable. You may expect small annual adjustments, but you assume the system will not quietly take money away unless there is a public change or a clear mistake. That assumption is the error. In 2026, Medicare Part B premiums and income-related surcharges are overriding that expectation and shrinking real income for millions of beneficiaries. The most common mistake retirees make is focusing on the gross benefit number. You see the COLA increase. You see the official statement. You assume that is what you will receive. What actually matters is the net deposit. And that number is controlled by systems that operate automatically and silently. Once Medicare is involved, you no longer control the deduction. Once income thresholds are crossed, the surcharge is applied without negotiation. By the time many retirees realize what happened, the money is already gone. This is especially dangerous because the trigger often comes from decisions made years earlier. Income events from 2 years ago, selling property, withdrawing retirement funds, realizing gains, are now being used to justify higher Medicare costs in 2026. You may feel financially stable today, but the system is reacting to your past, not your present. That delay catches people off guard and creates the false belief that Social Security itself is failing. Stay with me until the end of this video and subscribe to the channel, because understanding how Medicare interacts with Social Security in 2026 is no longer optional. If you ignore these mechanics, you will keep losing money month after month without understanding why. And you will not know what to check or how to respond when your check keeps shrinking. Have you ever looked at your bank statement and just felt confused? You hear all the news about a Social Security raise. You do the math in your head, but then the number that actually lands in your account, well, it's smaller. It's a really frustrating mystery, and a lot of retirees are facing it right now. So today, we're going to put on our detective hats and crack the case of the shrinking Social Security check. Okay, let's just dive right in with the big question, the one that's on so many people's minds. You were told your benefit was going up, so why does it feel like you're taking home less money? The answer you'll see isn't some simple accounting error. It's actually buried in the way two giant, complex retirement systems talk to each other. So we'll start our investigation right at the scene of the crime. That gap between the number you were promised and the one you actually got. This is where all the confusion starts. Millions of people see these headlines about the annual cost of living adjustment, the COLA, but they just don't see that full increase in their bank account. And this right here really shows you the heart of the history. On one side, you've got the official number from Social Security, your gross benefit with the latest COLA baked in. But then you look to the other side and that's reality, the smaller amount that actually hits your bank. So what gives? Where did that money go? Now this is interesting because it reveals our first suspect. While your Social Security check might have gotten, say, a 2.8% bump, your Medicare Part B premium could have jumped by an even bigger percentage. And just like that, it eats up and sometimes completely wipes out your days before you ever even see a dime of it. Let's keep going and uncover our first major culprit here. It's a process that happens quietly, automatically, every single month. This isn't a bill you pay or a check you write. It's a deduction that happens totally behind the scenes. And here's the crucial point. For most retirees, these Medicare Part B premiums are basically, as one source calls it, an automatic extraction mechanism. It's not optional. The money is taken out before your Social Security benefit is ever sent to you. Which means that gross benefit number, it's a number you never actually get to hold. This lays it out perfectly, the journey your money takes. First, Social Security calculates your full gross benefit. Then, right away, Medicare takes its share right off the top. And only then is the leftover amount, the net payment, deposited into your account. This simple three-step process is the #1 reason for that gap Webb saw earlier. But hold on, that standard Medicare deduction isn't the whole story. For a lot of folks, there's a hidden accomplice at work, and its power is tied to financial decisions you made 2 full years ago. Yeah, this is where it gets really tricky. So let's put a name to this hidden accomplice. It's called IRMAA. It stands for Income-Related Monthly Adjustment Amount. Basically, it's an extra mandatory surcharge that gets tacked on to your Medicare premiums if your income goes over certain levels. You can think of it as a kind of high-income penalty that can seriously inflate your Medicare costs. Okay, listen up, because this is maybe the most important clue in the entire mystery. IRMAA isn't based on what you're making now. It's based on your tax return from 2 years ago. So a big income event way back in 2024, something you might have totally forgotten about, is what's triggering a higher Medicare premium for you today in 2026. It's truly a ghost from your financial past. So what kind of events are we talking about here? Well, a lot of the time they're actually smart one-time financial moves. You know, selling a house, doing a Roth conversion to save on taxes later, or even just taking a bigger withdrawal from your IRA 1 year. Any of these can unexpectedly push you into IRMAA territory 2 years down the road. All right, so now we've identified the culprits. You've got the standard Medicare deduction and its sneaky accomplice, IRMAA. Now, let's look at the financial traps they set inside the system, because they can have some really big consequences. This table shows is the infamous IRA cliff. And it really is a cliff, not a gentle slope. Earning just $1 single over the income threshold can literally push you into a much, much higher premium tier. We're talking hundreds or even thousands more per year. There's no warning, just a sudden, steep jump. And this quote just nails it. It's a disproportionate penalty. The system doesn't care if you only went over the line by a little bit. The consequence is the same as if you'd blown past it by thousands of dollars. Now, you might be thinking, wait a minute, isn't there a hold harmless rule that's supposed to stop my Social Security check from going down? Well, yes, but you have to read the fine print. That rule has major exceptions. If you're new to Medicare, or if you're one of the people paying those IRMAA surcharges, you are not protected. And just to make it even more complicated, the income they use for this whole calculation isn't just your regular taxable income. It's something called your Modified Adjusted Gross Income, or MAGI. And this can include things you might not even think of as spendable cash, like tax-exempt interest from municipal bonds. It all gets added in and can quietly push you right over that cliff. So there you have it. The mystery of the shrinking check is solved. The culprits are those automatic Medicare deductions and those delayed IRMAA surcharges. So here's how you can put on your own detective hat and figure out what's happening with your specific situation. Think of this as your personal action plan. First, find out exactly what you're being charged for your Medicare Part B premium. Second, check if you're being hit with an IRMAA surcharge. If you are, dig up your tax return from 2 years ago to see what might have triggered it. And finally, compare your gross Social Security benefit with the net amount you actually get. That will give you the full story. And let's be absolutely crystal clear on this one because it's the most important takeaway. This is not a mistake. It is not a temporary glitch you can call and get fixed. This is the system working exactly as it was designed to. It's a structural feature of how Social Security and Medicare work together. And you have to understand it to plan their finances in retirement. And so, we'll leave you with this final thought. Your retirement income isn't just about the money coming in from Social Security. It's also about the money going out for Medicare. To really have a handle on your finances, you've got to be watching both sides of that equation. So, the question is, are you? By the time most retirees notice that their Social Security check feels smaller, the damage has already begun. The money has already been deducted, the premium has already increased, and the system has already classified the beneficiary into a higher cost structure. What makes this situation so difficult is not just the financial impact itself, but the way it unfolds quietly, without a single dramatic event that clearly signals something has changed. Social Security was built to feel stable. Medicare was built to recover costs efficiently. When those two systems interact, stability disappears for the beneficiary, even though both programs are functioning exactly as designed. In 2026, this interaction is one of the primary reasons retirees experience declining purchasing power, despite hearing that benefits went up. The core problem is that retirees tend to think in terms of benefits, while the system operates in terms of deductions. Social Security communicates increases. Medicare executes reductions. The retiree experiences only the final number, not the logic that produced it. That gap between communication and execution is where confusion and financial stress take root. Once Medicare Part B premiums rise faster than COLA, the math no longer works in the retiree's favor. The increase is swallowed before it becomes usable income. For higher-income retirees, IRMAA compounds the effect by adding another layer of mandatory costs that are completely disconnected from current financial reality. The system does not ask whether the income spike was temporary. It does not consider whether savings are already being depleted. It applies the surcharge and moves on. This creates a dangerous illusion. Retirees assume that nothing is wrong because there was no announcement of a cut. In reality, the cut happened indirectly. It happened through automatic prioritization of healthcare funding over income stability. It happened because Medicare premiums are treated as non-negotiable obligations, while Social Security is treated as the funding source. Many retirees discover this only after comparing notes with others. Two people with similar work histories and identical gross benefits receive different net deposits. One is protected by hold harmless rules, the other is not. One crossed an IRMAA threshold by a small amount, the other did not. From the outside, the outcomes look arbitrary. From the system's perspective, they are simply the result of rule execution. What makes this even more unsettling is how limited the correction mechanisms are. Appeals exist, but they are reactive, not preventive. They require documentation, time, and persistence. During the appeal process, higher deductions may continue, forcing retirees to bridge the gap with savings or credit. For those living on tight margins, even a temporary reduction can have lasting consequences. This is why retirees who do not actively monitor their net income are at risk. Social Security statements alone are not enough. Medicare notices cannot be ignored. Tax decisions made years earlier must be revisited through the lens of Medicare costs, not just tax liability. Retirement income planning in 2026 is no longer about maximizing benefits. It is about minimizing silent losses. The broader implication is that retirement has become more fragile than many expected. Not because the programs are collapsing, but because the rules governing them are increasingly misaligned with how retirees experience income. Stability now depends on awareness, timing, and active oversight. Those who assume the system will protect them by default are often the ones who lose the most. If you take nothing else from this video, understand this. A smaller Social Security check does not always mean Social Security is failing. More often, it means Medicare is extracting more than you anticipated, using rules that operate in the background and on a delay. That distinction matters because it determines how you respond. Panic leads to bad decisions. Understanding leads to control. This channel exists to surface these silent mechanisms before they do lasting damage. If you want to avoid learning about income loss only after it happens, stay subscribed and follow these updates closely. The system is not slowing down, and the rules are not getting simpler. The retirees who adapt are the ones who maintain stability. The ones who don't are left wondering where their money went.
Hello there. Are you currently navigating the complexities of retirement, or perhaps rapidly approaching that significant life milestone? The Retiree's Handbook is your dedicated YouTube guide for all retirement and pension news right here in the United States. It's crucial to stay informed about your financial future. We cover understanding pension benefits and maximizing your Social Security, ensuring you have the knowledge you need. Our channel provides actionable financial tips for retirees, helping you confidently make the most of your golden years. Don't miss vital information that impacts your peace of mind. Join our growing community today. Thank you for watching. Your financial security and retirement is incredibly important, and we're here to help you every step. Please subscribe to the Retirees Handbook channel to never miss our latest updates and valuable insights. Join our community for continuous support, future pension news, and helpful resources to empower your retirement journey.